Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Thanks, Marty. And how are we doing in YouTube this morning? And everybody, welcome to the Traders Lab. It's good to be back. How are we doing in YouTube? Okay, thanks, Outer Edge. Thank you. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream is about integrating Bookmap order flow tools with auction market theory using a volume profile. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community at no cost, as well as a library of webinars and, of course, the Trader Lab community. The idea of Trader Lab is to help traders develop an understanding of the business of trading, how it works, what kind of business this actually is, and how you might actually develop a business plan or a way to operate in an environment that's 100% random 100% of the time. We can develop trades that have statistical probabilities or edge, but we can't predict the outcome of anything. So it's not about being right or your attachment to getting approval from the market. We all want to, quote, feel smart and be validated, but the word feel has nothing to do with it's a business. The business is our obstacle to participating and potentially succeeding in this business is how we feel. It's not about because our feelings actually generate a lot of what we do. But the doing part of this business is only engaging in the market when we have a statistical edge. That's actually the business we're in. However, how we feel generates a lot of what we do. And for most retail traders, it's the feelings that actually are what we're responding to, not to the actual business. If you're interested in the business of trading, you might want to visit Trader Lab. It might help you get a better understanding of the common problems we all face and also the potential solutions. So let's move along. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. I will be sharing structured trades, but remember everything that you do is really related to what aligns with you psychologically and also what you can extract statistically. Everybody's different. Everybody finds their own comfort or time frame. And then the idea of this is to understand market mechanics. How does it work? Now, the other part about market mechanics, just in case you we're looking for a little conflict in your mind, is it operates in what's called fractals or different time frames. So the trend might be up, but we may end up being short today or looking for longs for continuation of the trend. Which is the right plan for you? Interesting question, isn't it? Well, let's take a look at what we have. Now, this is a RTH volume profile chart or microcomposite profiles. See, day off and everything gets out of whack. And what we're looking at is, and this only includes Friday, did not include Monday. So this is up to Friday. Monday was not a full day of trading. I don't include it. So I just leave it off. So this is Friday's high. This is Friday's low. And this is a key level above 47.75. It was our target actually on Friday. We didn't quite get there. And then there's a potential target up at 66 quarter. These are high volume levels. And in the auction, high volume represents acceptance. Now, the thing about acceptance or a retail price is if the price becomes too high, like over here, then we might not stay there. We'll go, gee, that's too high. We're out of here. And then we go down and we try to figure out what's too low, which is right there. That's a previous retail price, too low. So what you're seeing is too high over here, and then we go down and come up to a high over here. That's a retail price, too high. Come down over here, too low. And then we're looking at it coming back here. And to take this out because it was too high. So that's the plan. So the trades from this day up, which is a trend day, and then Friday, so that's Thursday, and Friday were to come up into here. And then maybe there, wherever it goes, part of the joy. So now let's look a little further. Up in here is something called a low volume node. This little notch over here. So think of this like a distribution. So the market tends to go, what's too high, what's too low, and what's a fair price? The fair price is around 32.75. Now what that means is that's where the highest volume is. And think of it like shopping in your store. So it's retail. If we get too high, wherever that is, and that's part of the joy of randomness, we don't know, we might rotate back and return. We can also come out here and then return. Now here's another piece of this just to make it more fun for you. What's under yesterday's low, Friday's low? Stops. So it's not unreasonable that if we're in this range that we can come outside, take out the weak longs that are still in here from this day up and maybe test down into this range and see, once we take out weak longs, we can come back and then maybe continue the trend or whatever it does, it does. So for me today, initially, I was looking for longs up high, but because we were going to open in a gap. And then just before the RTH opened, we came back in the range. When that happened, that changed things. Then I'm looking for it to potentially come down to a couple different levels and maybe take out yesterday's low. So I'm kind of in this, it's basically a flip the coin. And here's another reason why it's flip the coin. This yellow line is the fair price from Friday. You'll notice where we closed was here. That's a balanced day. That means two-sided rotational trade. And if you go back and look at Friday, you'll see it was just a big balanced day. Well, balance leads to imbalance, and that means two sides are active. So your sellers are here, your buyers are here, and chop. Mean reversion. So that was Friday. And Friday wasn't fun to trade. Some days are fun and some days are more difficult than others. Mean reversion is more of a difficult condition, and most of the time that's the condition of the market, rotations. So if the stops are here, we're looking for it to come out here, and at this point we have sellers in the market plus the possibility of squeezing them out. So you got to be prepared for everything. So this is the higher time frame. These are key levels. Now let's go to Bookmap, and I'm going to give you a couple statistics. You have to vet these for yourself, so let's write those down. Let's just make sure. So we have the yesterday's, actually, I'll just give you some stats and you'll see. So we're opening higher inside of yesterday's range. The settlement is down below us, okay? This is yesterday's high. So we're opening inside of that range, and there's the RTH open. So what does that mean for us? Well, the potential to take out either the ETH high or low is over 90%, and you need to vet these for yourself. The probability of getting to the ETH or overnight volume point of control, which is there, is about an 82% probability. Taking out the previous high or low, 81% probability. Well, there it is. Taking out the, let me just see, first hour's high, 67% probability. Getting to the previous point of control, 67% probability. So we have statistics open. The ETH low is open statistically. That's open. And we have levels below. So it's kind of a mixed bag. And don't forget where the stops are. So my inclination early was, and this happened, this selling came off right here going into the RTH open. So I was still, when this shifted down right here, because the ETH volume point of control was above us, when this shifted down, that put the long side in jeopardy for me. So it was like, and I was kind of disappointed because I had my long trades all set up. That's the way it goes. So the idea of the Trader Lab is to help traders stay in alignment with the market. And if we understand what the market actually is, it's a pricing mechanism. And what we're looking to do is to try to determine what's too high, what's too low. And we can do that by looking at the potential of the auction. This is a buy sweep here. Often when I see a buy sweep, it suggests a rotation down. When I see a sell sweep, it suggests a rotation up. And it's not, it's just a piece. And it's always maybe. So we have our statistics, and now we have our RTH open, which is here. So I see the sweep. I'm looking for a rotation up. I have my sweep here. I was looking for a rotation down. So rotation down, rotation up, and what's going on? High probability of taking out yesterday's high. So I have nothing to do early because at this point I'm thinking, well, if I get buyers here and I take out yesterday's high, I then have statistics. I have the ETH mid and I have 4850, which I tested already in the ETH, and I was above it. Well, now I'm below it. So this acts as resistance. First piece, 48. So now I know I'm below 48. I have the potential to come back to it. I have to take out yesterday's high to come here. That's what I know. Now, and the rest I certainly have no idea. So open, this is developing volume point of control. This is our retail price. And the developing volume point of control is high volume. So basically, what this is telling me right here, and I don't know, remember, I have no idea. I'm just looking at locations and trying to get a sense of who's going to take control. And I always suggest in Trader Lab that nobody trades the open unless they have isolated it for specific behaviors. So, and the reason is the open moves quickly and there's no structure. So the only structure you have to lean on is the previous RTH and the most recent auction, which is the current ETH. So based on the current ETH, you're starting out right here, and what you know is what's above us is too high, and we're opening above below. So let's come back to the pieces. This is too high because we left it here, and then we open down here. So this becomes the developing volume point of control. It starts right there. So this is the retail price, too high in the ETH last auction. This is a retail price that was a target from Friday. We are now below it, and we opened below. So everything is suggesting potentially lower, but I don't have a trade, so I don't do anything. But here is the first potential indication of going lower. Developing volume point of control. Sellers take control. We come back, and this is resistance. Now, for me, this is aggressive. And for developing traders, I always suggest don't do it. Because we could just as well just open lower since the trend is up and come across and squeeze. What we don't know is whether we're just going to open lower, go higher because of the statistic, and go up to our targets, or come down to the other side. So since we don't know that, this would be a very aggressive trade. Up to you, but you have to have a trade plan and you need to understand context. For developing traders, not a place to trade. So right here, we get Vpac migration. Let's look at the sequence. If this is too high, variable high volume node, and the volume point of control shifts lower, the high volume, remember shopping, If this is too high and I get this, I test here, it's still too high and I break low, you can sell this with a stop over here. That's a trade in the Trader Lab. And again, I don't even discuss these. I should say I'm discussing them here in the stream, but for a developing trader, they shouldn't be taking this trade. What they should be doing is isolating the behavior of and have create a plan of the open. And the opening elements are the statistics, opening higher inside the range, what the probabilities are, and this is the first microstructure and developing volume point of control. That's just a short. So I hope that makes some sense. By the way, if you have questions, please ask them, post them. I'll do my best. Hello, Gabriel. Amir, good morning. Barry. Fred. How we doing, guys? Please give a like if you're visiting in YouTube. We like to be liked, and it helps the stream. Remember, there's no cost for Trader Lab. It's available to everyone. You're interested in the work in the Trader Lab and the idea of understanding the business of trading and developing trade plans. That's the primary purpose of the Trader Lab. Doesn't matter how long you've been trading. The idea of Trader Lab is to kind of separate the fantasy from the reality of what the business is. And I know when we come into the business, if we have no experience, we kind of imagine what it is. You ever take a job somewhere and you think it's going to be something and then you find out what it actually is? It's a bit different, don't you think? So too high, and what's this? Too high, I'm going to label this one. I called this Vpac migration. I did a specific stream on it, and that's available to all of you in the Trader Lab. And if you're going to be trading the open, you definitely want to take advantage of that specific webinar. It's really designed to understand the behavior of migrating volume and what it says. I don't use indicators. So for me, I had to kind of figure out, what does it all mean? What's this behavior mean? And can I interpret this behavior based on the participant behavior and the volume? Because in shopping, isn't it the volume? You go to the store, there's a retail price. And because most of the volume is there, and if we find out that the price is too high and you could buy it elsewhere for less, then you won't pay that anymore. You'll go to the store where the price is lower. Have you ever done that? Or buy a car or something and leave the dealership and shop elsewhere because you can get a better price? So the participants think this price might be too high at the moment. If that's the case, then this becomes the new price. I can sell this. This happens. What do you see? We can sell it and we're going wherever. That's part of the joy, is randomness. Now I'm going to label this. So if you're not trading the open, there's no trade. And remember, and I know, most retail traders don't understand FOMO. If you don't have a vetted trade plan for this, where you understand what's happening based on the context, which is up in the higher time frame, remember what we want to be doing. We want to be trying to get aligned with this is a trend. The trend is up. What do we want to do? Get long. How are we going to do that? Well, if we can take out the longs here, I think that sets up a nice long. That's just me. So the way you might want to trade this is not take any shorts, waiting, subject to your time frame or fractal, looking for longs, or shorter time frame, taking shorts, looking to take out the weak longs so you can get long back in alignment. And that's what I was looking at for today. Basically, longs primarily, not taking the shorts, subject to my trade plan. If I don't have an opening trade plan, I have no trades other than looking for a structured trade. So let's look at the structured trades. So out here, chop, 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 micro consolidation. Let's kind of look at the language of this thing. So right here is a micro high volume. This is a consolidation. Well, I look at consolidations as auctions. That's actually what they are. And it happens in all time frames and fractals. If I have exhaustion down here, and I have my sellers here, my high volume is here. I'm going to draw a little box around this. And all I'm doing is I'm going to isolate where the behavior changed. And I can tell that just by looking at the profile. This is called a low volume node. This is the high volume, and this is the other outside edge. So the sellers are there, the buyers are here. The volume is here. If I break high, this is resistance, and then this becomes support. So this is the retail price here. This is too high up here. This is the retail price here. And this in the micro fractal, this is retail. So I got retail, retail. So the possibility is to come back here and continue lower. If I come across this, then I'm looking at up here and up here, these layers, because they were too high. So it's shopping. Now, so far, I have nothing to do. I'm just a tourist, and I'm thinking shorts. Let's see what we do. So, too high. Microstructure is here. We break low. I'm at VWAP and Vpac. I still have no trade here. I have this open and I have this open. So for me, as an opening trade, shorts are viable. I could very well be out of the trade here, subject to my trade management, and I have nothing to do yet. This is support here. ETH low has a high probability, and so does this. So all of these are targets coming down. ETH low. Naked VPOC and a big sweep. So for the shorts, if you're taking shorts, your trade is primarily to come to ETH low and here. This is what we have. And I think we have settlement in here someplace too, around 32. If that's in here, nope, let me put it in there. So this is really where you're going to be trying to come down here for any shorts. Those are primary targets. Very two-sided trade. I find it rather not clear in the sense of context. Context is down at the moment in an intraday developing time frame. However, the higher time frame trend is up. So you really got to be thinking relative to how you trade in the sense of time frame. Now this is VPOC migration. Right here, let's look at this because this is where right here it's set up for me more short opportunity. If this is too high and I still have, when this shifts, it's saying this is too high. So that's a primary element. So if this is too high and I come outside, it sets up the following thing. Now, when I saw this, now this is important, this level, I'm thinking mean reversion longs. So if I take a long, it's back to here, and then there's resistance if I took a long. So let's look at the long, and then we'll look at what else happens here. So this is too high. So I have a couple possibilities. I can come out here, come back here, and then either go up or whatever. Let's see what happens. Does not happen. I don't get a trigger. Where do I come? I come out here. Now, here, now there's another thing you can do with this. When you get VPOC migration, but this is a very aggressive trade. I wasn't thinking about this one, but now I want to be thinking short Again, I'm still looking at shorts. Okay. Let's just watch the behavior now. You come to VWAP, mid. I have my Vpac migration here. I have my stops under here. Yesterday's low, stops. I'm looking for this. Right here at 9 a.m., I get something called the IB30. This is the first 30-minute higher low is the IB30 since we made the low. That gives me a higher probability of taking this out at some point and taking this out. So I'm still now looking short in here. Vpac migration. This sets up, so now this is too high. I'm going to label it. So for me, I'm only thinking shorts at the moment, though I want to get long. So how do you put this together? I want to get long, but I want to get short. Well, in this time frame or fractal, I want to take shorts. Now, this is not a short. I just remembered this one. This could be a short if it's in your plan. With the Vpac above, I would not take this short. I'd be looking at the Vpac. The Vpac shifts down. When the Vpac shifts down, it sets up the next structured trade, which is out here. It's mid VWAP to Vpac. So this is the first, not necessarily first, but let's say pretty much the first trade. So this sets up what's called mean reversion. And because I have a statistic down here, and it's over a 90% probability I take out either the first hour's high or low, which is this, and I got these stops, I want to be short. So now my volume point of control is below me. I've got my mid and my Vpac, and I have an outside edge up here called the low volume node. So out here is the area. So let me mark it, and I'll explain what we're doing. This is called mean reversion. And what mean reversion is, besides being mean, is outside in trading. So if we know this is too high, and now there's more volume here than there was up here, think of it like shopping. Well, the shoppers left the store, and now there's more volume here based on that yellow line, which measures the volume overall for the entire day, the developing volume point of control. That's what it's called. If this was the previous price, it was too high, then if I come outside, I'm going to be looking for too high, which is out in here someplace, and I have a structured trade mid VWAP to Vpac. And again, looking for this. So this is my short coming up. Let's look at it. There it is. So this trade right here is a structured short, and it goes from VWAP mid, and you can take it here also. This is a trigger. Your stop needs to be 3 ticks over this. You would not get taken out. And then you come here. So this is your trade. And then you're looking to fulfill the statistics of this. Because don't forget, at this point, I don't think we took, let me look here. I don't believe we did not take out yesterday's high. So we're looking for yesterday's low and possibly to come down to 22.23. That's my trade. So whatever happens, happens from here. So here to there and out the bottom. That's the trade. And what happens? It takes it out. So then my next location is up here. I don't know if we took out, let me look at this. Did we take out yesterday's high? We did? No, we didn't. Okay. I don't believe we took out yesterday's high, if that's correct. So this is our resistance. This now becomes support, which you don't know. So this is support. This might be too long. If I get above here, then, so either I'm going to come here and rotate back, or potentially the trend is changing intraday. So let's see what it does. Vpac migration. What's that telling us? Well, maybe this is too low. So what's going on here, and this is just, the market's doing what it's doing. We can't make it do what we want it to do. We just have to try to stay in alignment and wait for trades that have an edge. If you don't have an edge in this, you just have nothing to do. If you're trying to catch all the wiggles without an edge, you're going to put yourself out of business. So if you only get a couple trades a day that have an edge, those are your trades. If you sit here all day, you're not an hourly worker. You have to remember, you're not trying to make something happen. You're trying to make something, you're waiting for your trade. So this is just two-sided rotationary trading. It's you can lose substantial amount of funds in something like this if you're trading it without thinking about the narrative. The narrative right now is two-sided trade. If this is too low, we might come back and test it. Let's see what it's doing. Yeah, this is not a great day to trade in the sense of at the moment. And the reason is that we're not respecting levels. We're just sloshing around. So you just have to kind of look at where's the levels and where might we react. Yeah, look at this thing. So let's look at levels. This is a level right here. We went through it. Actually, let's see, what did we do up here? So here, this yellow line, and the reason this one is kind of interesting is the change. We have change here to here, and we have change there to there. So these are areas of resistance. So when we come back up, I'm going to be looking at these areas because the shoppers left here. So let's just look at the levels. Vpac migration suggests lower. If we cross above it, it suggests potential return. So to here and then maybe there. So let's just watch. And this is the mean reversion trade. Okay. So right here, we're looking for it to fall out the bottom. If this is too low, then the idea is we come back and check what's too high and squeeze these guys out, which we don't know. Vpac migration. This suggests this is too low. So now here's the possibilities. Pull out here for VWAP to Vpac. That's 1 for mean reversion to this mean. So that's one possibility. The other possibility is come down here. That's another one. And then higher. So let's see what it does. This out here, and there's no range. I was looking at this trade. Right here is an outside edge, right here, because this is where the stops would be for longs or trailing stops in this leg. You're going to have a lot of stops here. So if I rotate outside, and you have to always look left, I want these stops to get taken out, and then I want to see exhaustion. Here I see 80, the stops coming out, there's 88, and I get some buying icebergs right here, light buying. So limit icebergs consuming those stops. And that's often what you'll see when it comes to icebergs. They're taking the other side of the sell stops. They know where the stops are just like we do. Come down here. This is absorption. There's no range for a long here. So there's nothing to do, though it's a structured trade without range. You can learn the process by observing the behavior, but the range has to fit. In other words, I personally cannot get long at 38 or 39 with a 2-tick scale. That will not work for me. So I can't take that long. I can observe it, but I can't take it. Outside edge is out here. Stops are going to be under here. Nothing here. Then if I come out here, I'm looking at this. This is my last high volume area. This is my support. Let's see. How close did we get? Well, there's no precision in this, So this is your support area. If it doesn't come to a location, there's no reason for you to interact, in my opinion. If you have a triggering structure that you have vetted, you can. Your stop, this trade fails under here though. So your risk, if you entered here, this has to fit your trade plan, but your stop needs to be below this. So you might not have a trade there. What's going on here? Yeah, look at this. Hey, you need one of those airline sickness bags. This sets up a counter rotation. This sets up a counter rotation. This is your VHVN or Vpac. This is a mean reversion back to here. Let me remove this because it's covering up the Vpac. So this is a mean reversion trade. Remember the short we talked about earlier, which was, I think, there to, I'm not sure which one it was. This is a long, same trade, coming back the other way. And these are not trade recommendations. We're in two-sided trade. It's easy to get chopped up in this because it's rotational trading. So this is a good day to just be very, very patient. And if you're just being mechanical without seeing what's going on here, you're not thinking in the sense of what's the condition of the market. So this is an area I'd look at right here for a long. And all I would be trying to do with it, if I get a trigger, is to come back here and then out the top, out here. Because I have over a 90% probability of taking out the first hour high or low. Now, can you tell me which one's going to get taken out? So this is a trade I'd be looking at for reverting back. It has not done its thing. So let's see how it behaves out here at this outside edge. That's out here. So we want to see what happens in here. This is not a good trading environment for me. So, no. No, it's just two-sided here. If you're into short-term rotational trading, you might be able to work with this. This is a short trigger up here at an outside edge. But I know statistically, I have a high probability of taking out the first hour's high or low. I think you can almost flip a coin. Buy sweep here suggests rotation down. Trigger here at a VHVN is a potential short. But again, it has to be part of your plan. For me, I just sit and park. I have no need. High volume structure is down here. This is where the buyers came in. So one of the ways you can look at this is let's look at some ideas. If this is too low, variable high volume node, and I had my buyers here, support is like on top of this, right out there. I'll just throw a little box around it. What you're looking at when you look at these things is what's called distributions. And all they are auctions. They're very simple. And the idea is what happened here. Now, I don't know here what is going to happen. We don't know that. But when I leave this volume down here, I can figure out what did happen. The sellers were absorbed, the buyers took over. We can see that. Now, if this is the retail price, and if it's too high, I'm going to bounce off it, like here, and continue lower. If I cross above it, then I'm looking for the outside edge, where it's too high, and the possibility is to come back here. That's the first thing. And then wherever, maybe here and bounce up, or get through here and come here. It's a sequential process, but I have no idea what's going to happen. So that's a potential short, and you have to be thinking about this and this. That's what you got to think about. Support was here. Resistance is at this high volume up here. No opinions, because we're in rotational trade. So all of this is called is outside in trading. The mean is here. So depending on where we go, and we have to not forget what the problem we have is we have stops under yesterday's low, and it is two-sided trade. So let's watch the behavior here, because this is where our buyers were activated. So we want to watch this. So this is critical for the longs at the moment. What happens right here? So let's watch it. So if you think we're going up, you'd be looking at a long right here with a tight stop right under here. So it's a pretty tight stop. And you'd be looking for this, this, this. Let's see what it does. And again, for me, I don't think too much about this kind of stuff because I'm always thinking about what's my risk, what's my opportunity. Now, this is a pretty tight stop. You know, if you get long here, your stop's only out here, you know. So that's pretty inexpensive risk. But then you've got to be thinking about this to get here. And then you might get sellers here and we continue down. So you would really have to be conscious. This is more of what we're looking for, and then squeeze. So we'll see. But this is your support. And where does it come from? It comes from here because the buyers are here. So if these buyers were active here, if I come down there, I'm looking for them to be active again. Then if I can come across this range, I've got stops sitting here, here, and up here. So that's a rotational trade. It's just, you know, whatever. So if you didn't take a short here, you could be taking a long here, you know, or you take the short and you cover at the target and you get long here and you're looking to come across here and squeeze and come back to the mean. This is called mean reversion trading. It's my least favorite condition because it's very easy to get fooled. Where's the outside? Once these outside edges are set up, I think you have a much better chance of coming back here once you know, because this is the mean. So if we find too low in a microstructure, we can come across here and come back here. The obstacle right now is the VWAP in the mid. So let's see if we come back. You guys have questions, by the way. Sebastian, nobody trades live in these streams. Or I can't say nobody, but most don't. For streaming, it's really more about education and understanding market mechanics. The goal is that you can maybe be able to trade live. If you understand how the market works, which is much more important than, you know, anything else, you can anticipate the locations. That is where the education lies. We all have winning trades, by the way. It doesn't matter. Anybody can have a winning trade. If you understand why you might not take any trades except at these outside edges, that's the value of this stream. Just to understand market mechanics. Most traders just, you know, don't understand how the market works. So they don't stay in the business. So that's the objective here. We are in real time at the moment. So this is about as close as I'm going to get to actually trading here. I also, in the Traders Lab, I actually have webinars that I've done that are 4 to 5 hours long of real-time narration. I don't take trades in those, but I basically go as close as I can get to actually, other than pushing the button. So I think you can get the benefit from that. That's pretty important. I suppose I could always trade on sim here, but I'm kind of reluctant to do it because then other traders are going to take the trades, and I don't want that. That's not any good. Please give a like if you're in YouTube. So what we have here is a short here, if it's in your plan, and we have this as a target. This is a potential long, and we have to get through this to get there. We are going to take out either the first hour's high or low. We are below some important levels, and I do think the market is vulnerable to taking the stops out of yesterday's low, which is at the top of the stream. That was our plan. So subject to your plan, you can be trading both sides of this, or you're going to get aligned with one side. So that's really up to the individual trader. Some traders are going to trade long, short, whatever, or you pick a side. I always suggest to developing traders, you pick a side. I kind of I like the long side better, but right now there's no real longs here other than a potential mean reversion long out of here. But we know at the moment that we're leaning into these stops down here. So you need to prioritize what you're going to do. So if you took a long here, you know that mid and VWAP are your obstacle. Does it have enough range for you? That's a question. If you got in, you got to anticipate that we can have retail traders selling this, and then this is our support. So if you took a long here, you got to scale there. If you're long from up here, then you're still long, and this is your support. So you can break it down into chunks in the sense of how you operate it. And then you already know what you'll do. So if you're short, you're leaning into these statistics down here, then you're only on the short side. If you're trading both sides, that's up to you. This is a legitimate potential mean reversion long to come back here. Which is it for you? If we get under here, then we're statistically still looking at this. Remember the top of the stream. Why would we go for that? Because we had two-sided trade on Friday, and we tested higher in the ETH, and now the stops for the longs that are in here and the longs from Friday who didn't get out have stops there. Then that sets up a probe into this trend day up, and I have levels there that we still be looking for longs after we get the shorts out. And let's look at where those levels might be. Down here. So if I can get under here, I'd be looking for longs out here. If I can't get under here, then I know the potential is to come across and squeeze. That's what I know. So if I'm trading shorts, this is support. This is resistance. If I get through here, I go there. If I don't get through here and I get under here, then there. And it works like this. It's conditional statements. If this, then that. If not, then what? If this is too high, if this, then potentially that. And if I get down here, then that. If this is too low, then what? Then that. If I get through there, then what? Then that. If I don't get through here, so this is too high, then what? Then check what was too low. There. If I get below this, then what? Then out here. If I can't get below here, then what? Then back here and maybe back here. So I've got two scenarios here. I've got a short scenario. This is key. This is key. I've got my buyers here. If I get over here, I go there. If I don't get over there, I continue south and maybe go here. That's what I know. There's nothing more to trading than that if you think there is, because otherwise then you're predicting. And the better condition to be in mentally, I believe, is to be accept the environment you're in, which is at best maybe. Maybe it's going to go down. Well, maybe it'll go up before it goes down. Maybe it won't go down and it'll go up and take out yesterday's high and not take out yesterday's low. That would be pretty bullish. What is it going to do? If you can't answer what it will do, since I don't believe anybody can answer what will be, because that means prediction and certainty, then all we can do is operate in what it might do, and we already laid out what it might do. Top of the stream, it might take out yesterday's low and take the stops here. Then we have shorts set up and a couple longs for counter-rotational trading. If I get below here, then I'm looking here. And if I can't get here, that's pretty strong, then up. So that's what I know. That's all I need to know, because I can't know anything more than that. So if I know this is too high and I didn't get back there, that is suggesting if I get under here, I continue. That's what I know. That's all I got to know. Then it's, do I have trades that get me in alignment with what the current condition of the market is? And what is the condition of the market? Longs from over there, longs from Friday, and their stops are here. And the market tends, write this down, the market tends to go up, to go down, and goes down, go up. What did we do on Thursday? The market goes up, to go down, and then it goes down, go up. So what happened on Friday? Let's go back and look at it. The market goes up to go down, and that's all we got. And I was looking for it to come a little lower, and it goes down to go up. Goes up to go down, down to go up. And this was a neutral kind of a configuration, not a neutral day. What it was is a standoff. Long weekend, long liquidation. So what about the condition of the market? Stops are in here, stops are under there. I have not taken out yesterday's high, so what seems more likely to you? Well, for me, yesterday's low and then a probe down into here to take out some of these guys. Market goes up to go down. Market goes down from somewhere to go up. And the from somewhere is part of the joy of randomness. But for me, unless things change substantially, I'm looking on the short side and then to get long, unless it falls apart. So that's as far as I go. So I know my stops are here, which is a target. And I know if I come out and come in, I'm going long. So this is my area out here for targeting. 20, 22, and it doesn't mean it won't go lower. It's a target. So we're going to watch and see if we have enough time, and the market's just sort of not going anywhere in a hurry. It's just rotational. Support is here. So if you get short from anywhere, this is your support. So I know that. So how do I know that? Because my buyers were here. See them? So if I know my buyers took over here, then we might get those buyers again in this area or not. So that's what I know. I don't know anything else. So if I do get short anywhere, and I would not be taking trades here, I know that I have to scale here. So if I can't, how do I get in over here with a 2-point scale? I don't bother. If I can't get outside with enough range, it just doesn't matter. I sit back, I wait. Remember, we're not here, we're not hourly workers, and we're not sitting here so we have to make something happen. That's not the business of trading. The business of trading is patience and waiting for an edge. Do you have an edge here? Even though we might come down here, do you have an edge? And how do you get an edge? Well, you have to do the work and reverse engineer the condition of the market and the alignment and say, well, how do I get into something? And where's my stop if I want to be short to go for this? How do I manage my trade? Where do I take a trade? Where's that? And that gives you an edge. There may be no edge here, even if we do take this out, because we got support. Do you want to sell something at support, or do you want it to break support and then have it test previous support, which becomes resistance, and then possibly sell it then? Which do you think is better? Oh, Sebastian, basically a candlestick is really very limited because you can't see inside it. So what we're doing here is we're looking at levels that are created by the auction or the volume, which is really what the truth is of the market. You know, if you run out of buyers, why does it stop? You know, well, they're not ready to pay it. And the other part is the sellers, the icebergs, absorbed the buyers. So, and what do I know here? The buyers were here. So this is my outside edge, the low. And if I get long here, which is neither here nor there, if that was my plan, my stops are 3 ticks under here, and I'm looking for potential rotation back here. If I can't get back here, then I know I still got my stops under here. So the order flow is showing me absorption there. That's the red bubbles. That's delta. And what happened up here? The sellers were here, and the sellers are up here. The buyers are here. The sellers are there. These buyers got absorbed by these iceberg sellers. I come back to this level where the buyers were, and the sellers are here, and they are absorbed again. So all of this is saying lower. The thing I need to do is get below this to go to these locations. And you always got to think from both sides, Sebastian. The other side is, or I'm going to rotate up and squeeze these guys out, the shorts, so I have buy stops here. So I know that's the possibility. I don't know what it's going to do. So all I'm going to do is sit and, if I have a trade on, I manage my trade, and I have to scale here because of what might happen here. So I know I can come back here, or I'm going to fall out the bottom and go here. So then I have to wait for locations to participate. So we're going to watch these areas. This is an outside edge. This is the current retail price. And in a fractal, this is the retail price. So I've got that, and I've got this. My inclination, not a recommendation, is to come out here and lower. So we'll see. You guys have questions? You guys have questions, please post them. And if you're in YouTube, there is a little bit of a delay. Also, please give a like, subscribe to the channel. There's a lot of additional education, stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, swing trading, algorithmic behavior, crypto, if you lean that way, a lot of stuff. And there's no cost for any of this. And of course, there's Trader Lab, which is a 24-hour, 7-day-a-week global community. And you're all welcome to that too. It's a community of traders who've come together to leverage their experience. It takes a lot of work to do this. Research, statistical probabilities, vetting trades, setups, as you call them. I call them structured trades because they have to align with structure. Statistical probabilities, vetting trades, seeing what other traders are doing. And the most important part maybe is something called a trade plan, which most traders are in too much of a hurry to, quote, push the button for the dopamine fix. You need really to understand the business you're in. It's a gaming process. It is not, you can call it trading, but it's gaming. And we're overlaying structured trades on top of a probabilistic business, which is gaming, or like casinos operate. So why would you target this? Language of the market is this is where the buyers were, remember? Well, if I know the buyers were here, then I understand that we can come back and check this price right here, because that's where the buyers took over. This is how order flow is helping me. That's why I draw these little boxes and lines, so you can see it. There's buyers here. There's buyers here. There's buyers here. The red bubble, the delta, is the sell stops. But why, when you get sellers, does the market not go down, you're asking? Well, because there's a passive side, and you can't see them, except when you have an aggressor. And what are aggressors? Delta is made up of stops and initiators. So it's a mix. Stops become market orders. They're measured as aggressors because they cross over. There's a market order. So that's why if you were taking shorts, you got to be conscious of this. Now, I still think we have the possibility of coming down here, but as a day trader, if I'm trading any of this, I know I got to get through this. And what's my other possibility? If this is where the buyers who are active over here think this is a heck of a deal, the shoppers, then where's my stops? There, and possibly I'm going to come back here and maybe come back here. This is rotational trading. And yeah, it's a pain in the, because you got to have a trade plan that recognizes the possibility. And when you got here, you would have to, and you might determine that right here, that you get this reaction and resistance is there. There's my sellers. Where's my support? It's there and there. And where's my micro high volume? Let's go a little further. I'm going to take you into what's called fractals. And it's a concept of if this volume down here that created this is too low, and then in here, I have volume in this structure, and I break high, this becomes support. This is too low. And now where am I going? Well, the next place to go is here and maybe out here. And I'm in a two-sided trade. It can do anything. Remember, we did not take out yesterday's high. And statistically, and again, you got to vet these for yourself. I know you're going to find this one exciting. There's almost an 82% probability. Past performance, not indicative of future results. We're going to take out either the previous day's high or low. And as Dirty Harry used to say, do you feel lucky? Well, do you? We haven't taken out the first hour's high or low, which has over a 90% probability of taking out this or that. And we have an 82% probability of taking out yesterday's high or yesterday's low. We did take out the ETH low, and we have about a 90% probability of taking out the ETH high or low. We got this. Taking out the ETH high is not a high probability. It's there. We have about an 82% probability of getting this thing. Overnight volume point and control, and the overnight mid is about a 72% probability. You have to bet all of these for yourself. So now when I have these statistics, so now I'm looking at this and I'm going, what's it going to do? Isn't that what you're thinking? Sometimes you just have to go, I don't know what it's, by the way, I never know what it's going to do. And if you gotta, when I say gotta, I'm not saying you have to do anything. I'm going to suggest you consider, how's that you don't predict anything, that you align. It's a whole different mindset to predict, hey, it's going to do this, it's going to do that. How about it might do this, it might do that, and how do I recognize the possibilities and the probabilities? Well, I have a good probability of getting up here, but I also have a good probability of taking the first hour's high and yesterday's high, or the first hour's low and yesterday's low out. Those are both high probability statistics. I had a high probability of taking this out, but taking the overnight high out, so the overnight high and low is not high. It is about a 24% probability in this condition. So 75% probability-ish we don't. Does that give you a lean to the short side? What does it do for you? Now, the lean has nothing to do with predicting. It's only because the trend is up. You see the conflict? So the probabilities suggest lower, but where the trend is up. Let's go back to the thesis. Stops are under yesterday's low. And we have longs in here then from yesterday or Friday, and we have longs in here from Thursday's trend day. I think, while it can do anything, that gives us a lean for shorts. But if it's not breaking down, I have to trade what's happening in the short term. So in the short term, this is support. And it could do this all day or whatever. Also, I know the president is going to be speaking or giving a news conference. I'm not quite sure when that is. Edgar, I'm getting it. That's a great question, Edgar. Would I be looking for a short if we take out the first hour's high because of the mean reversion? Not necessarily, because I have this and this. Depending on the behavior up here, and I have this was a naked volume point of control, I have to see what happens if we come outside. If we come back in, I would be thinking mean reversion. So yes, but it depends. You know, if it's a bullet train, that's one thing. If it's just a squeeze and we come back, then I'd take a short back to Vpac. Right now, though, I'm still thinking this is vulnerable. But it's just two-sided trade. It's really kind of trashy, you know. So guys, when you recognize the condition of the market, which is really, it's called context, and when you see this kind of rotational trading, it's not the higher time frame, the guys who make directional moves. It's us. It's algos, and it's us. And we are, retail traders are not, don't do well, as we know. So they're going to be over trading in here, going long, short, this, that. When the range is like this, 4, 5, 8, 10 points, it's not so good. It's easy just to get involved and have your stops with everybody else's, which is where? There and there. So what do you want to do? Are you going to sell this when you know there's stops sitting here and the retail price is here? So I just don't bother with it. I found, and this is all a matter of really individual, but I think we all have this FOMO thing that, boy, I could have got short here, I could get long here. Yeah, but that's sure. But that's not how it works in the real world when you're on what's called the hard right edge, when you don't know. But here we got to take what we know. If we assume we cannot predict anything, which I hope is what you'll accept, because then you're not going to be spending your life trying to be right. You're going to spend your life differently. Instead of most retail traders who are needing to be right and predicting and looking for action, maybe the thing to do in this business is to be very patient and wait for an edge where you catch the other side offside. Where's the other side? Well, right now we have stops up here, which might be fine, but we have stops closer by here and here. So what I want to be thinking about is, if this is the retail price, can I come up here? And can I get the fuel out that's over here? So again, there's nothing for me here to do. I just watch it. If I come out here and I can hold out in here. I'm looking for this, and I'm really in the middle of nowhere. This is like no man or woman's land. It's just a very tough trade here. So if you're feeling a sense of urgency, like you need to do something, that's just FOMO. Sometimes the best trade you can take is the one you don't take, because it's a position. When I was learning trading, they always said, guys on the floor, because all my buddies were floor traders. There were no off-floor traders when I started, or very few. And technical analysis was really looked down upon as voodoo. It was all fundamentals inputs back then. Their technicians were rare. So, and it was really, it's very different from what it is today. So, but you'll start observing behavior, and you have to start, in my opinion, thinking about why retail traders fail at this. What are they doing? And most retail traders tend to do the same thing. That's why the statistics are so poor. So you can learn from your experience if you've been trading. It's not about making it better. It's about finding out why it doesn't work. And the thing is, we all have winning trades, so we think what we do works. So we just think it's persistence and make it better. I did that for too many years that I care to think about. Because you could have no plan and have winning trades. Gamblers have winning hands. You have to remember that. Write that down. So we need to differentiate our behavior from gamblers. Gamblers win. The casinos pay the gamblers, don't they? But what happens over time? The casinos extract the dollars from the gamblers, even though they pay the gamblers. So the gamblers always have winning trades. And we can be gamblers working hard and not realize that because of the randomness of the behavior of this, that, yeah, we're going to have winning trades. That's a problem, actually, because winning trades without an edge is just gambling. So the idea is to have an edge and only interact where that edge shows up. And then understand market mechanics, which I've kind of explained to you. We have a bit of a dilemma, don't we? We've got yesterday's high and the IB high, and we have yesterday's low and the IB low. One of these guys is going to get taken. And that's all I can tell you. Statistically, I can tell you that it's a low probability that we get back to the ETH high. 82% probability I get here, about 80% over here, 90% probability I take out either the first hour high or low, and about an 82% probability I take out yesterday's high or low. How do you like that? So now what? Isn't that the question? GMART, in the institutional space, they are not trading. Well, they're not day traders. They're not doing anything like this. They are hedging. They are doing all kinds of different stuff. They're using futures, or they're using SPYs against, it's a whole different business. Auction market theory has been around a long time. I learned it in the mid-1980s from Peter Stottlemyre, and he actually brought market profile into the retail space. He was a floor trader at the CBOT, grain trader, I believe. And so I met him in the mid-1980s, and I learned it from him. Market profile, there was no volume. So that's how the market works, because nobody ever stops to think about why do we have a market? What's the purpose? But as far as, by the way, do institutional traders use this? I'm going to say prop traders, professional traders that I know use this. When I say prop, I'm not talking funded accounts. I'm talking true prop firms use this process. A lot of traders I know over the years use this. And then they adjust what they do, and they use this as a chassis. And I always say in the Trader Lab, the volume profile is a chassis to understand market mechanics. It's the behavior. Then as traders, what we need to be able to do is isolate behavior when it's in alignment with what we think is the possibilities, Today's a bit murky, you might say, because the possibilities are this and this. So pick one. I think, and what I think has nothing to do with trading. It has to do with my thinking in the sense of where's the easier place for the market to go. It's easier. Now, you might find this a little strange for the market to go here than it is for it to go up, though it never has to go here. If there's enough demand, it won't go here. It'll go north. But what's easier? Where's the low-hanging fruit? And this is just the way of thinking. It's the stops that are here. You see? So I'm more inclined to be looking for it to come out the bottom and then look for a long than I am at the moment to take longs in here. So for me, I'm looking for shorts, but I have to be conscious at the moment. This is support. So I can isolate these components in different time frames or fractals. And in the intraday developing time frame, I personally don't use time. Everything else is time-based for me because it's daily primarily, and then consolidations or consolidations in RTH. And then in the ETH, I'm using fractals or rotations, same behaviors, and then here's same thing. This is developing. So all this is ongoing, and the volume is changing based on where the participants interact. My inclination is this is easier for the market to get to because there's sellers down here. And if the market can get down into those guys, then the buyers might have a good shot. And this is where my outside edge lies. It's out in here to look for longs to come back to there or wherever this is at the time. So I'm inclined. Anyway, shorts are my preference in the current condition, not longs, but looking to get long after the stops come out under yesterday's low. Can you see the logic behind that? Edgar is asking if the taper at the top is selling pressure. I kind of see it as lack of buyers. So when the pressure, when we're going up and it's almost like in the store, by the way, Vpac migration, this is pressure for the continuation lower. Let's just watch what it does. Remember, my inclination is this, for all the reasons already discussed. And if you've missed the stream, it is available for you guys to review. It's exclusive, really, for the Bookmap Discord Trader Lab community, as well as the library of webinars that are available. And you can see these because every day is unique. Every moment's unique in the market. Any input comes in, it can change the market. It can change the perception of valuation. Piece of news, and all of a sudden there's something positive, then this might be too low. A different kind of news, this might be too expensive. We're going to go look for too low, and wherever that is. Currently, I'm looking for this, not a trade recommendation. If the condition changes, I change. But so far, nothing has changed to tell me I should be long. The only thing I know is out here, it's too low. Too low, too low. So I know right now, too high, retail. So too high, retail, too low, and then down here, too low. I got to mark it so I don't forget it's there. This is my kind of my ballpark now. So let's see what it does. If this is what the market is, this is what it is. It's not my job to make it do anything more than for me to recognize the condition of the market and then determine if I have an edge. If I don't have an edge, I don't have a trade. I just sit here. And because my job, just like the casinos, is only play games that have a statistical edge. If I get bored, I'm not going to start making them up. They don't do it in the casinos, and they seem to do pretty well. So I figured that's a good business model. Only play games that have an edge. In the Trader Lab, your job is to try to find out where that edge is. So this is our area to observe right here. Notice the liquidity stacking. I'm going to open this up so we can kind of see it. And so we want to watch right here the intersection of a variable high volume node, liquidity that just came in the book, and if we get selling triggers right here. And then this is where you're looking to go. Very tight. Let's watch. Buyers are here, sellers are here, sellers are here. Micro high volume structure is there. It's in alignment with the variable high volume node. Let's see what we can do. We also need to be conscious of where our stops are in the current swing. And right now they are sitting really up around 43-ish. So I don't think that's an issue. We need to be and that's not a recommendation. We're looking for shorts. This is where we might come, and this is our resistance, is this area out here. Let's just watch it now. Not a trade recommendation. For the volume, it's flipping around here. We are in balance. I mean, it's just rotational trading. So let's watch. We're interacting with the liquidity. Let's watch the order flow. 27 buy stops. If we get a sell trigger, we're going to look for this and then coming down, but right now we don't have it. Let's watch in here. Okay, let's watch here. If we get a trigger, we're only looking to come back and rotate back down. Yeah, it's microstructure. It's really not a good trading environment, guys. I mean, I can see this to there. That's about it. So when I'm looking at a trade, I'm looking at the range. Now, the behavior is generic, the way the auction tends to work. If this is too high, this is what's on the list, potentially. And it's not, it will, it might. It might come here. But you'll notice what you see here, a lot of high volume areas, and we're just sloshing around. There's no consensus. So this is where it might go if it doesn't get above here. If it gets above here, then that is off. And it's not a trade I would take either. I'm just telling you. Because there's no range. I'm trying to draw this line here because that's the volume. So this is your resistance. This is resistance here. Where the sellers take over and the high volume is here, that's resistance. This is the retail price. You would be trying to come here if this trade fits for you. It doesn't work for me. And I'll tell you why. Because if my entry is here, this is where I'm trying to go. Where's my stop? 3 ticks above this. It's not worth the trouble for me. Now, if I get further outside either one of these sides, then I can operate mean reversion. So when you have a trade plan, if you can recognize the condition of the market, which is rotational, then the idea, now here's Vpac migration. If it pushes above here, then we can continue higher. Otherwise, this. Really not much of a day. you guys have questions, please give them a post. Do my best. This is what the market offers. This is what you got. So this is the new retail price. This is the previous price. If this is too high, we're going to come back and check this. Stops are going to be at the VWAP in the mid. That makes it a potential area to observe. I'm not sure why you'd want to be trading this, but that's up to you. Now, the thing about the auction, and I think it's really important, and what I always suggest in Trader Lab is that you narrate the auction, is it's not that this is a short, okay? But with this here, you got to be very careful that we don't come and squeeze these guys out. And you can't predict that. So if I come back above here, the trade would fail, okay? Because this trade, the high volume is here. If this is too high, we come back here. That's what I know. But I don't have trades. I just can't do anything. I can read it, and I can read the possibilities. That I can do. But can I trade it? I'm going to say I can trade it. I won't trade it. The only reason I won't take a short here is because the range and where my entry would be. So this is resistance at the moment. If I can stay below that white line, I'm looking for this. That's it. Doesn't have to do it. There's nothing more to it than that. This is too high, and this might be too low, then I can look at this as support, and I can look at this as resistance. If I cross above it, then I'm going to continue potentially higher, and I've got nothing left to do. Now, if the range from here to here was 8, 10 points, 15 points, pick one, it's the same risk and the same location for the trade to fail, except your range would make it the risk reward worthwhile. So you can learn behavior in Trader Lab. Then it has to fit. So if I risk around 2.5, 3 points, I got to try to get here to get risk neutral. So it's kind of a bit close, don't you think? So that's how I, for me at least, determine whether or not a trade is qualified. Everything might be qualified. But if I don't have the range, then I just don't take the trade. If I wait long enough and I'm patient enough, I'll get trades that fit better from a risk reward point of view. So I'll take those, you know. Does that make sense? Balance days, how do I read long tapers for the volume? It's still developing. Well, I read the taper after the fact. I can't tell until I leave an area. So when we were up here, we ran out of buyers, so the price is too high. And on the other side of it, I ran out of my sellers down here, you know, so that's why we're doing one of these things. And until one side throws the towel in, it's rotations. I still think this has more potential because we know there's stops here. And the market is inside of yesterday's range, Friday's range, I mean. So I still think this is where I would lean. But it doesn't mean we won't squeeze out the shorts. So, I mean, for me, I'm only looking short at the moment. But it's what you have to be doing if you think that we might take the longs out is to only be taking outside in trades from the short side and covering for the upside rotations in a rotational market. I hope that makes sense. Please give a thumb up and a like in YouTube if you got something from this. There's a link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. There is no cost. There's a library of webinars that are available to you, plus the Trader Lab community, and all the additional education that's available at no cost. This is what the community looks like. I'll just give you a quick peek. There's a lot going on in here. A lot of charts, a lot of interaction, a lot of conversation. You know, it's a great team. And by the way, it is a team because we're all doing work to help each other, develop trade plans, understand statistical probabilities, discussing how to navigate the market, especially a condition like this can be very detrimental for retail traders. This is what the library of webinars looks like. You might be interested in that. And there's also 60 PDFs of structured trades that you can download, and they are available at no cost in the Trader Lab too. And they're just broad strokes. This is some order flow phenomena. These are actual trades I've taken and also screenshots. And it's really a broad stroke. There is no cost. You're all available to come. If you're interested, come to Trader Lab. I'd certainly like to meet you there, say hi, and introduce yourself to the community. I think it's rather unique. And if you're interested in learning about the business of trading, you're all welcome. Use the link in the bottom of YouTube. Please give a thumb up and a like on the way out. And I look forward to seeing you here, same time, 11:30 Eastern Standard Time tomorrow. Have a great day. And Trader Lab, I'll see you guys, all of you in the lab momentarily.